All right, we are live for a Thursday edition of the Mike and Mario Show, and once again, excited to connect with you, Mario, to just basically go over this past week and as well as all the things ahead, just because everything is unraveling right now, and definitely want to get your take on some things. So before we jump into that, how are you doing, my friend?
Yeah, I'm doing well, Mike, and you?
Oh, doing good, man, doing good. And so it seems like everything that we've been talking about for several years now seems to be coming to a head right now, and I would imagine more and more people are really uh, anxious yet curious to see how this all plays out. Just because it's touched a lot of people's emotions this past week with the closure of the banks and people not being able to get access to their funds, and of course the 97 percentile of the above 250,000 not sure if they will get their money or not. But then again, here comes the backstop that provides a way for them to get their funds. But anyway, man, lots of things is going on, and nothing really has started in comparison to what we think is going to be coming in the future. And so let's just jump right in, man. So as of right now, that backstop program seems to be uh, offering a sigh of relief so far in this country here. But then again, of course, the contagion has kind of trickled over a little bit to Europe. But here we have new Fed bank backstop has a scope to inject as much as $2 trillion. And then I saw earlier you mentioned that, or somebody mentioned about, is this like QE all over again? And so here we go, 2 trillion that possibly will be utilized to back up what this article talks about here, the regional banks, just because that's for the most part what they have in those underwater debt obligations, i.e., bonds that are being held by them. And this is just a way to paper those people over. But we're not even talking about the bigger banks. But what are your takes on this? And will 2 trillion be enough just to calm the waters? And then how much will be needed for the GSIBs if we got to that point?
Yeah, you mentioned earlier as well about this 97% of the deposits in SVB were above 250,000. So
Mm-hmm.
the Fed, they did this backstop called BTFP,
Mm-hmm.
basically guaranteeing multi-millionaires deposits. And that just goes to show that that bank wasn't really, it was more like a business bank, and they didn't manage risk that well. That
Mm-hmm.
2 trillion backstop, I guess if you look at the whole FDIC report for the fourth quarter, I think losses, uh, uh, unrealized losses are around 620 20 billion.
Mm-hmm.
So I guess 2 trillion could could be enough. And that's not an announcement by the Fed. That's what an analyst at JP Morgan thinks they'll have to do.
Yeah.
And yeah, I think that's QE. What else is it? Unless they keep it off their balance sheet, but that's just a farce. If they don't put that on their balance sheet, they could put it on what they call a special purpose vehicle.
Mm-hmm.
But people would see right through that. And as you said in the beginning, yeah, things are unraveling, and uh, ultimately, it's all the debt that's been created
Mm-hmm.
since the '08 crisis, and even before that, we could go back to 1971. It's all the system is getting to a point where the debt is too heavy to sustain, and the central bankers think and politicians think that the best thing to do is to inject even more debt to keep it going. Well, they don't have any choice. They're really between a rock and a hard place now.
Yeah. And it's unfortunate that, as a part of this, and I called it, when I was ranting earlier in the week that, the regional banks are deliberately being purged. And so it's my suspicion that the goal is to concentrate as much of the nation's wealth and power into the very top few banks that will ultimately survive, or try to, or they, meaning the regulators, will try to have them around for this next digital transition. And so in doing that, it looks as if like a part of my little theses might be unfolding a little bit, just because all the funds is basically racing from the bottom of that of the currency pole all the way to the top, as big banks experience deposit spike after Silicon Valley Bank collapse. And so everybody's removing their funds, taking it up to the too big to fail banks, which is going to cause even much more of a problem. But then again, when those banks have issues, then what? What about those deposits? You know what I'm saying? So that's where I'm like, it's still a sticky situation no matter what. But does this surprise you at all that people are running from the smaller banks to the bigger banks?
No, it doesn't surprise me, but I think it's a dangerous move. It's like
Mhm.
moving from the, the what's the saying, from the fire into the frying pan or whatever,
Yeah.
because I don't think these GSIBs are safer than the
Hmm.
regional banks. I think the safest banks are very small local banks. To be honest, I wouldn't
Yeah.
be putting my funds in the GSIBs. There's too much complacency, in my opinion, that the GSIBs will be safe.
Hmm.
And don't forget, the GSIBs have uh, almost a quadrillion of derivatives.
Hmm.
Of course, that's more global because the American banks have probably around 300 trillion or 200 trillion, and it's probably more anyway. But if the European GSIBs go, like Credit Suisse, uh, all the um, all the American GSIBs, they will be in trouble too. And that's why the Fed, the Bank of England, the ECB, all came out like in the last 24, 36 hours.
Hmm.
And they've said that they're monitoring the situation with Credit Suisse because
Yeah.
it's so important that Credit Suisse goes, all the counterparty risk gets triggered, just like it did with Lehman back in 2008 with the derivatives. And no one really knows where how much of these OTC derivatives there are because they're all off balance sheet.
Yeah. So that is save that calamity for a future date is ultimately what'll happen. But while you were talking or earlier, so we have. Let me just go back here to our to to our top 20 poll here, and just talk because last week we kind of ended on just of course SVB being the focal point, but now as of now it's starting to spread up. So First Republic Bank this morning opened up. I think the share price dropped 35%. And then what was surprising was that next article here is that we were told that it looks like some of the big banks are getting involved. Let me find that article here because it caught me by surprise if I can find it. But it looks like some big banks have stepped in to try to help provide some cushion for First Republic. What did I do with the article? Here we go. Okay, here we go. So yeah, forgive me. Here is the most recent update. This was about an hour ago. And it says stocks sour on the First Republic Bank deal talks. And so here we have, it says, according to people familiar with whatever, several large banks are discussing a potential deal with First Republic Bank that could include a sizable capital infusion to shore up the beleaguered lender. Any deal would need to be a blessing to the regulator. So at just off that news in and of itself, it looks like there was a little bit of a rally with their share price there, but it's yet to be determined. But I wonder what, if this is true, what inspired this rather than just the whole backstop using that gateway that has been created, or is this a way of them trying to really put out the fuse before it actually implodes even further, or what are you thinking?
Yeah, it means that the big banks are concerned because if number 16 already dropped, fell, the domino,
Mm-hmm.
SVB, now you have number 15, First Republic, and then 14, 13. Eventually it will get to number one, which
Yeah.
is JP Morgan. So I think that's what it's about. And it kind of negates this idea that the big banks want to take over the regional banks a
Mm-hmm.
bit. Maybe we're jumping the gun because if they did, they wouldn't help
Mm-hmm.
First Republic, I guess. I think it's that they're more concerned, yeah, that there's a huge problem, not just for the regional banks, but for the whole banking system.
Yeah. So, and that's where where everything we're talking about now initiated with the U.S. And of course, it started to spread. And so, just throughout the week, I was seeing so many. I think it was Norway's pension fund or something like that was involved, had some funds at SVB, and so there's a variety of European tech companies and the like were all incorporated or all had funds at SVB. So the ripple effect went all the way out towards Asia. Then I think it was what Monday or Tuesday morning, Asian markets opened up in the red, and then there was talks about situations there. So, And then BNP Paribas, the French bank, as of I think yesterday, was in the news because their share price wasn't doing too well. Try to do some quick little research, nothing popped out. So I'm not sure if it's been pacified over or whatnot. But so in Europe is no better than the U.S. And as of today, they're hiking rates continuously, which leads me to believe that next week, Jerome Powell might find a way to at least a quarter, just because he wants to stick to his jawboning. And so, will there be a similar situation of the banks in Europe that are basically been ZERP for the last 8-9 years? Will there come a day of reckoning for their banking sector, given the fact that they're in the same debt, type of fiasco that we're in as well? So what are your thoughts on that?
Yeah, I mean, Europe has had problems with the banks for the last 12 years, like in Italy, Greece, Cyprus, and of course now Credit Suisse. And Credit Suisse, some people think it's an outlier, but it is just a poster child for these too big to fail banks. So Europe is no, they're part of this problem. They're going to be affected big time. And that's why the ECB, the Bank of England, we're keeping a close eye on Credit Suisse as well. It's all the interrelationship, all the derivatives that they trade with each other. Credit Suisse as well. Don't forget their primary dealer with the New York Fed. So they're big in the U.S. as well, on their own in the U.S. So it's, all these banks, one goes, the whole system goes. I think in 1931, there's a big Austrian bank, Credit Anstalt, that collapsed, and a lot of Americans lent money to Germany, and Germany lent a lot of money to the Austrian bank. And eventually, there's a banking crisis in the U.S. a couple of years later when FDR took office in March of 1933. That's when he had to declare a bank holiday. So I would say that in 2023, if we had a failure of, let's say, SVB or Credit Suisse, it would take a lot less than 2 years for it to spread. It would be a matter of weeks. So Europe is not exempt or immune from this, nor is the UK. Of course, UK is probably in even worse shape. We had an SVB UK bank here that had to be taken over by HSBC for £1. And I'm sure the government and the Bank of England told HSBC, don't worry, take over it. We'll come to your rescue if you have problems. So again, taxpayer gets hurt. And that's why I keep telling people the way you fight these people is not to deal with them. Keep as little funds as possible with them and keep stacking, keep stacking. There's some...
I bet from this week alone...
Or if you were a low blood pressure, keep borrowing and buying silver.
Max out those cards.
More debt than Credit Suisse, I heard. Low blood pressure.
So I imagine this week alone, there's been more people running towards the exits because, of course, we got a little crypto blip. But then again, of course, gold and silver is doing quite well despite all this craziness going on here. And I haven't seen the typical, slam down of the metals that we've seen in prior years. So I wonder, is it becoming that much more challenging to do that, given the fact that you got a lot of big players now looking to exit out of this complete debt unraveling? So makes it a lot harder to try to cover the price action. What are you thinking?
If I was a billionaire right now and had money, different banks, yes, I'd probably be moving it if I had it as some regional banks to the big banks. But I'd also be thinking, how can I be completely outside the whole banking system? And there's only one way in terms of monetary asset, and that's gold and silver. I guess you could be out of it as well in other assets like hard assets or tangibles. But liquid monetary asset, gold and silver.
Yeah. So here we have a super chat. Appreciate you. Oops, I'm sorry. It says red pill on steroids. It says Janet Yellen or Christian Lagarde in a thong.
Oh God, I wouldn't want to think of that. No.
Yeah. So I'll just keep it sweet and simple. Definitely not yelling. You know what I'm saying? Yelling. Just
Mm.
she's scared. She's just looking at her scares the hell out of me. So
I think what's the prime minister of is it Lithuania or one of those countries? Maybe that, but not.
yeah, that's a scary sight, man. But appreciate you. Let's keep it moving, man. So one thing that caught me by surprise as well is that outside of course, the banking fiasco, we still got the whole debt issues, debt ceiling. That's still they're gonna push that to the last minute, and by waiting so long, given all the concerns we have, that stands to not be resolved the way that it has in previous years with some type of last minute package of something, because I think they're gonna literally break something even more. But so it is. There's more stories surfacing, which is interesting because I'm surprised they're allowing this. But here's a New York Post piece saying the U.S. dollar has become an at-risk currency. Like, oh, really? Like, what's changed? Like, and so of course this article here, highlights a lot about activities happening beyond the dollar, and a lot of it's been brought on because of the sanctions. Like, a lot of nations realize that, you're in harm's way if you're holding something that can be used against you if you don't cooperate. So there's alternatives that are being made, and we'll find out how that plays out. But it's just interesting to see how the New York Post is willing to admit that, hey, the dollar may not always be what you think it is. At the same time, the banks are going up. But
Yeah,
where's your take on this?
yeah, I read that article. Jay Newman, actually, and I looked into the guy. He's a retired hedge fund manager for Elliott Capital Management. So, yeah, this is a really thoughtful article. I didn't agree with everything he said. Like he said that China, Russia, and I forgot another, are avowed enemies of the U.S. I don't think that's true. I think the Russians and the Chinese just want to be respected equally. They don't want to be bossed around. But be as it may, he's got a point. We've been talking about this move away from the dollar because of all the sanctions, and that's what that guy notes. And he even says that it's very possible that we could have a debt crisis or a currency crisis in the U.S. because the U.S. won't be able to print its way out of recessions because uh, the U.S. will have to earn its way in the world. It will have to keep a currency surplus, and things are going to be a lot more expensive because there won't be a demand for the dollar as strong as there has been in the past.
Yeah.
But for you and I, we've been covering this for the last few years. It's nothing new.
Yeah, and and speaking of which, the rate, or I'm not sure if is it a race to get away from the dollar, or is it a slow progressive dialing back from using the dollar? Just because everybody can't rush to the exit at one time, because a lot of people are stuck holding them debt instruments. So it's a slow, gradual process, but along the way, there's clear signs of where people are exiting to the bigger players, and I think none can be greater than the recent activity with the British pound. So that's, of course, your neck of the woods. But as of yesterday, it surpassed all-time highs, and here it's still well above the previous highs here. And so, if the British pound was a former world reserve currency eons ago, and look at where it stands now in comparison to gold, and so it's definitely a preferred wealth preservation tool. If you look at this chart from this started back in 1973, where it's a lot cheaper then compared to now in fiat terms. So, but what's the sentiment overall in reference to coin dealers and things of that nature in your neck of the woods? Are the majority or general people going towards more coin shops, and is there any interest from more people waking up over there, or what?
It's a very small niche market.
Mm-hmm.
If you go out in the streets, not many people talk about gold or silver. And if they do, for example, like at my golf club, people think it's risky and so
Really?
on. But I've noticed, though, there's a pawn shop uh, in near where I live, and they've been selling a lot of silver,
Mm-hmm.
and they get it from their head office. They're actually not buying from customers coming in and then reselling it. And I
Mm-hmm.
went there, I think it was yesterday or the day before. They've run out of silver. And I spoke to the lady that runs the shop, And she said, yeah, people are, it comes, people want it. And she said,
Mhm.
some people are saying because silver is going to be used a lot for the electric cars and stuff.
Mhm.
And then I said to her, and also maybe because it's money. And she kind of didn't quite get that. But
Mhm.
yeah, so there is a little bit of a pickup in terms of the pound versus gold. Yeah, the pound is going to continue to drop versus gold. It's dropped
Mhm.
99% since 1953. The dollar's dropped 98.
Mhm.
So the dollar's been a little better, but it's still really bad, isn't it? 98% drop in 70 years.
Mhm.
And I think the last 1% is going to be really eventful. And I think we are in it right now.
Mhm.
That 1600 level we broke yesterday, it has come below it,
Mhm.
but we broke through there. That was the fifth time it did that. So there was really strong resistance there. And I think now it's going to fly. And I noticed looking at the websites of the bullion dealers, a lot of people here prefer to go online. Uh, there's a lot of out of stock coins. The premiums are still relatively high.
Mhm.
So, yeah, and one big dealer on the website, it says, due to, let me see what he says exactly. Uh, says, due to high demand, dispatch of your order may be delayed by 2 to 3 days. So, um, but I still think there's very little awareness of how important it is to have a bit of gold and silver. Uh, I told the story in one of my videos the other day that I took quite a bit of cash out of the bank a few days ago.
Mhm.
And I was asked, why are you taking your cash out? I said, well, I want to diversify, uh, away from your bank. And
Mhm.
she said, oh, you can transfer it to another bank. I said, no, why would I want to do that? The whole system is fragile. So a lot of people, like you're saying, people are taking their money out of the regional banks and putting it in the big banks.
Mhm.
I'm not sure that that's really a great strategy. You got to get it out of the whole system. Personally, I think.
Yeah, and speaking of which, real quick, and then we'll get to some questions. But here's an article that caught my attention just because this current bank run, as it says here, bank runs used to be slow, where people used to, you were forced to stand in line and form long queues, and then that's how people caught wind of it because you can see it visually. A lot of people stand outside a building, but now it's like you go on your phone and you can transfer your funds out. But then, as you mentioned, like you're transferring it out to another institution. And so, just as a little side note here, talked about how with the SVB bank run that they were not able to actually finish the full working day because it says about 40 billion, 1/5 of Silicon Valley's deposits in just a few hours, prompting the agency to shut the bank down before 12 p.m. So it was a digital bank run more so than physical, and which led to people, of course, internet, Twitter went crazy. So Twitter definitely amplified that narrative of bank runs, sending people to other places. And so primary point of all this is that while central banks are trying to prop up the system by creating backstops, which is ultimately more QE, it's going to cause more of a problem. But then again, while they're doing that, let me share something else with you. This is what they've been doing. It says why central banks added 70 billion worth of gold to their stockpiles. And so while they've been preparing for this moment of reckoning, they've also been getting their weight up. And so it just talks about all the lists of the emerging market banks that have been accumulating over the last several years because of these type of events. So it's never been more important, as always, to continue to get your weight up. So but I think it's going to become more clearer as to why central banks have been accumulating gold
Yeah,
as their fiat debt goes or nothing. But what do you think?
that's an alternative to the dollar as well, isn't it? And you
Mm-hmm.
notice that a lot of the countries that are loading up on gold are not uh, real close allies anymore of the West.
Yeah. All right. Well, let's get to some questions, man. Feel free to throw out some thoughts, ideas, suggestions, questions, and of course, like literally, this is just 1 week of 3 banks going belly up, and probably some other ones that soon to come, or what else. But
I think
feel
we're in
free
the
to ask questions.
top of the first inning still.
Yeah. Take basically, yeah, because we have a long way to go. But I think the good news is I think more people will begin questioning the security, whether or not their bank account is really, for whatever it's worth, if the FDIC insurance actually matters. And that's where people are going to start questioning that alone, which will then cause people to take out a little bit more of their own to either have it in cash form or to put it into something else. And I think that's going to always put pressure on the banks, because it's my personal opinion that confidence is shattered now. Like, you're not going to reestablish confidence after all these events is taking place, just because it's just beginning. So, but time will tell. All right, so let's get some questions out there. So if you see some questions or whatnot, feel free to jump on them. Let me see anything else stands out. Keep
Spinola Cirque, central bank gold holdings still at historic lows. I'm not so sure about that, whether they're at historic lows. They've been increasing quite sharply, but that's not a question.
Yeah, but even so, like, we don't really know what's actually being held in vaults in China and Russia. We just know what the World Gold Council tells us, which we all can probably believe is understated. So the banks that matter, we don't really know what they're holding.
There's a question there from MS Cololia.
All right, MS Cololia.
I was planning to transfer to a HSBC account or a certified check requiring 2 Piggys. Thoughts?
I'm not seeing that one.
Is that 12:27 your time?
12:27 my time. I was planning on transfer. Okay. Oh, yeah. I was planning on transferring to HSBC account or a certified check requiring 2 Piggys. Thoughts? That kind of plays into what we're just talking about. Like, everybody's situation is different. You know, it also depends on how much you're talking about, because a lot of people don't feel comfortable with moving completely if they have a large amount in comparison to just having just a little bit. But I don't know. What are you thinking, man? Like, it's
well, the other thing is maybe all the deposits will be safe. Who knows? Because the Fed can just say we're going to print 10 trillion and back everything, but then by next year you'd need like $50 to buy a latte. So your dollars might be there and everything, but they're not going to be worth much. And that's why I think it's still good, and still you still have time to put some of your fiat funds into real money, i.e. gold and silver, and maybe just put a little bit just to protect yourself if you're not too comfortable with the volatility. And the volatility is more a reflection of the instability of fiat currencies and not of gold and silver, because when you buy an ounce of silver or gold, it's always an ounce of silver or gold.
Right. Good point there. So here's another one here. It says, will crypto rise or fall if a bigger war breaks out?
I'll let you answer that.
My suspicion would be the majority of the crypto space would definitely take a dive, but because there's so much hype and hope for Bitcoin, it might separate from the pack, and as well as Ethereum. So it could be a receiver of all the extra stimulus that's going to be created because of the war effort. So Bitcoin could take off, other cryptos could dive, or it could just be a rally altogether. So you never know. But for sure, gold and silver will definitely get a boost. What up?
I don't remember how Bitcoin did during World War II or World War I, so it's difficult. It's
tested.
The track record is, the history is not long enough. I definitely hold on to gold and silver.
Yeah, 100%. UK Financial Preparedness says, question, are you aware, Mario, that the NatWest are restricting crypto buying now?
They probably are. I mean, I have my account with NatWest, and they're really a pain. Even when I tried to buy some gold and silver a few weeks ago, they were really difficult. I never buy crypto through the bank. I earn crypto, which really makes sense. I earn Steam and DTube and Hive coins because I put all my I publish all my videos onto those platforms. So but I wouldn't be surprised if NatWest is doing that because they're partly owned by the government.
Yeah, and just imagine if gold and silver goes, it take off. It's going to be the same thing for metals as well. And I even saw some stuff out there saying that a couple of bullion dealers here in the U.S. had their accounts closed. They just got a letter saying at that time frame you'll no longer be able to bank with us, and apparently it came out of nowhere. So I wouldn't be surprised if they end up cutting out those X's as well. So I have a question. It says the previous highs of the VIX and the UVXY during the past financial collapses. Could you expect to see those similar highs in 2023 financial collapse?
Well,
That's a great question.
it's not something I follow too much. Those are derivatives, and there are measures of volatility. Yeah, of course, they would probably spike if we have a financial collapse. And the thing with them is that if you have ETFs on them and there is a financial collapse, even though you might be in the money and making a lot of profit, your broker might not allow you access to your account. I remember in 2020, I had some puts on the or actually I had calls in the VIX, and I
Mhm.
did quite well. But eventually, when things really crashed, I wasn't able to get out because the account, the system IG index froze. So
Mhm.
that's something you need to consider. I think uh, best way to go short in a crash is to have cash really on the
Mhm.
sidelines.
Now, here's a concern I have because I hear a lot of people that are, heavy hitters saying that, the next fire sale that's coming, you're gonna be able to buy up anything. But my thought is they're going upon previous experiences like great financial crisis and everything in between, where the banking sector in general was relatively stable. Now we're going into something where the banking sector is brought into question, depending on what bank you're at. And if the regional banks are not having issues now, more than likely a lot of those people will probably put their funds into the GSIBs. Now, when the GSIBs turn to go belly up, then how will you get access to take advantage of those fire sales? If you're sitting, I think Warren Buffett's sitting on 100 billion or something like that for a rainy day. It's like, okay, will he get bailed out personally, or will he lose those funds if everything goes belly up, or will it be issued in a new digital dollar? Or see what I'm saying? But
Yeah,
this next event, you won't be able to just swipe your card and buy commercial real estate because you got the funds in the bank, because more than likely it's going to say error. So like we don't want
yeah,
you to have access to that.
and the situation could be so fluid. Like you could have your funds with the bank, and you're going to buy some property, real estate, and you're going to transfer to the seller's bank, and then all of a sudden the seller's bank goes under, and
Mhm.
you're stuck. And also using brokerage accounts, they could fail as well. They have relationships with banks. uh, yeah, maybe the best thing to do is to be out of the system. But Warren Buffett doesn't like gold, so he says. But I'm sure he probably has some coins and bars set aside for such an eventuality. And in this eventuality, you probably have to wait for the dust to settle to see uh, some kind of reorganization of the whole banking system.
Right. I
or
do
you
agree.
or you could barter. You could barter with someone that's trying to sell something. Um,
Yeah. UK Financial says looks like both Credit Suisse and First Republic Bank will be getting bailouts. So I try to find out if something's changed
well,
other than just my
well,
little article.
I think Credit Suisse is getting a line of credit from a
Mhm.
bank that's like almost bankrupt, the Swiss National Bank. Whether that will calm things down, and is I didn't see anything on this First Republic getting a bailout. I think it's what we spoke about earlier, that you said some banks have helped them, right?
Yeah.
Come in, but I see First Republic is down still about 11%. It's trading at $27.50. It did trade below 20 today, but
Mhm.
who knows? Tomorrow it could be at zero.
Yeah, that's one of the things you never know. Them boys is starting to look a lot like the crypto space, and
Yeah,
it's regulated.
I can understand what that comment said. Financial, what's his name? Preparedness.
UK financial preparedness, yeah.
Yeah, I think in '08 it was possible because the government still didn't have that much debt. Central banks' balance sheets were like a minimal compared to now. But just to come out and say, "Oh, we're going to bail them out," people are going to look into it and say, "This doesn't make sense. It's not going to work."
Yeah. Here's another question here from Spinola. It says, "Do you think precious metals dealers harm the silver market by jacking up premiums?" I don't
Uh,
think so. They got to run a business. I mean, they have a business to run, and they got something you want. So it has to
yeah,
be a little bit of a difference there for them to still
the,
stay profitable. So
the reason the margins in silver or premiums are high is because an ounce of silver is the same weight, of course, as an ounce of gold. But an
mhm,
ounce of gold is like $2,000 or 1,900 to buy. And if they make 2% on that, it's like, let's say, $40 profit. But in silver, it's still $20. You make
mhm,
2%, you're going to make $4. So that's the problem as well, is the price of silver has been so highly manipulated, lower and suppressed, and that the costs of doing business have gone up. So, but the silver hasn't gone up, so they have to jack the premium. Volatility as well of the price is something that increases premium because the dealers have to hedge their positions.
mhm.
But like Mike said, it's just like running a business. You have to make a profit. You can't. They can't sell it for cost, or else then it will be really bad because you won't be able to buy any because there won't be any precious metals dealers out there.
Yeah. Here's another question here. It says, "How much more debt can they pump into the system?" That is and so I'll go back to somehow, some way, the underlying problem of everything will ultimately boil down to the top of this pyramid here. And so whatever it takes to attempt to try to prop this up. And it says 1 quadrillion. And of course, we know that's low ball figure. So I don't doubt that if they wanted to save the system to prolong things, they'll find some special purpose vehicle tools to bail out the derivatives market, and then that will lead to hyperinflationary type of event. But
Yeah.
so yeah,
The other,
so in the long run, that's how much we can probably they can try to get out of this. What are you thinking?
well,
Or what one?
the other thing you mentioned about 15 minutes ago is the debt ceiling. We kind of
Mhm.
forgot that there's still that
Right,
elephant in the room
right.
aside from the banks, and I think it's coming home to roost, so to speak, in the end of May, beginning of June. So yeah, things are really uncertain in that sense. And how much more debt can they put into system? I think we're getting very close to the point where they might have to just print,
Hmm.
you know, and basically because a lot of these programs, bailout programs, are loans.
Hmm.
So, or maybe a war will solve everything.
Yeah,
Will
they'll need an event. They'll need an event, which would be the excuse to be able to restart the monetary easing again officially, and for the world to buy into it, or for the U.S. citizens to say, "Okay, we need to do this because we have to support our country." Yada yada yada. You know how that goes. So, but yet, yeah. Another thing is, because of this debt ceiling becoming an issue, my question is, who's going to be on the receiving end of all that debt? Like, we know that the world's dialing back from basically knowing that they're just basically they continue to take out more loans on top of loans on top of loans, not able to even touch anything. So that's why this alternative stuff that's developing from the Eastern Hemisphere is trying to minimize their exposure to that, to where the Fed might have to come in directly and be the only buyer if they're not already. So, yeah. What else you got here? Wouldn't have seats.
you
What we
erase the debt? Well, if you erase the debt, yeah, you will. That's a reset, and that's
got?
possible. But the people who would lose out would be all the people on the other side of uh, the U.S. government. You know, like
Mhm.
people who save in U.S. dollars, who save in government bonds, and people who are dependent on handouts from the government. All the creditors and the people who get not benefits, but the national. Uh, how do you call it, Social Security and Medicare and all that. So
Yeah.
yeah, you could erase everything, and also creditors, they will be wiped out,
Mhm.
and that's why you have to have very little in the bank. Everything in the bank will be wiped out if you erase the debt.
Now, just this something came to mind. Now that the banking sector is being exposed as being basically being underwater with all that, the bad debt they're holding, what about the pension funds? Like I haven't heard nothing about the pension funds, having issues with the debt they're holding as well. So it's good to say, they're not bailing that out, or will they? So like the contagion
Yeah.
event just on bad loans is going to be an issue that we'll see
The,
more probably this spring.
the other sector is private equity as
Mm-hmm.
well. They're having trouble. Blackstone, they're like they have defaulted
Yep.
on some commercial property bonds, and the other problem you have is what else? I can't think of it now. There's so many, but I agree with you. There's many things going on.
Yeah, this spring is it's gonna be interesting, man. It's gonna be yeah. What we have about 40 minutes. I don't see any other questions, just thoughts. But so Mario, uh, what are you looking forward? Or what should we be looking forward to? We got FOMC next week. We'll see how that plays out. What else? We got the CPI figures this week, whatever. But at this point, it's like, it's just I don't pay much attention to it, just because with this additional 2 trillion coming to existence, inflation, like they're continuing to expand the monetary supply. So consumer prices, in a sense, ain't went down, at all to me. But anyway, what are you thinking?
Yeah, CPI came out earlier, didn't it? But it's now with what the banks are going through, all these data don't seem too relevant. But yeah, the Fed will be important. They're coming out on the 22nd.
Mm-hmm.
I think from what I hear is that the market expects the Fed to do another 25, but then pause. But there are
Mm-hmm.
some people like Nomura, a Japanese bank, who's also a primary dealer at the New York Fed. They think the Fed will cut by 25, and yeah, they might announce something on quantitative tightening, because if they're going to backstop the system with 2 trillion, why keep selling treasuries? Because the sale of treasuries is leading to these losses for the regional banks. So, and we got the Bank of England as well next week on the 23rd. I'm not sure what the expectation there is. They might
Mm-hmm.
hike again, or maybe they'll pause.
Yeah. So just more stuff out there to come. So there's never gonna be a dull moment moving forward. Like, as I mentioned, like yesterday on the rant, is that, from the moment this stuff broke out to where the public became aware of it, it was a turning point to where there's no going back, and it's only gonna get quote unquote worse from here on, depending on how you view things and how you're positioned. So, preservation and safety is more important to me at the end of the day than anything else, because your average Joe don't have the savviness to take advantage of these opportunities. So minimize your risk is at the end, at the end of the day. But all right, my good people, as always, appreciate you for joining us. The primary point is do what the central banks are doing. And that has a lot to do with the fact that they're getting their weight up while backstopping their own problems that they created. So other than that, enjoy your weekend. Be blessed, be safe, and we'll see you guys next week. Peace.